Joining us now to talk about Logan Capital's large cap growth ETF, ticker LCLG, is Stephen Lee, lead portfolio manager and principal of Logan Capital. Well, it's great to have you with us today. For starters, Stephen, what's the history of Logan Capital?
Great, and it's great to be here today as well. And our firm actually started running large cap growth strategies in the early 1990s, 1993. And we formalized the large cap growth strategy that's the basis for this fund in 1997. And really, we're servicing principally institutional investors, charitable foundations, insurance companies. And our goal was really to set out to find those great innovative companies that were sort of changing the industries in the world, but also with an eye on the idea that let's make sure that we focus on companies that are actually have proven themselves through generating some profits, that they're not just great ideas, but great companies. And that's really the process we've been following for the last, since the 97. And then we started the fund several years ago. And about 3 years ago, we converted it to an active ETF.
That's great. So it sounds like Logan Capital has a long history of growth investing, even before the internet.
We do, which I think is helpful. Our team's been together for that long. So we've kind of seen great markets, challenging markets, and the way we do our process, we've really been able to find opportunity even in times that were probably a little less favorable for growth stocks. And in fact, we've found market volatility often creates great opportunities to find companies, when the rest of the world's a little afraid and less focused on the quality of leadership and pricing power, which is really where we spend our energy.
So if you had to sum it up, Stephen, what are the three key objectives of your ETF, LCLG?
Well, our goal really is to, be that good growth allocation. Really, if you look at our fund, we've tended to own some of the great companies that we're all well familiar with, but we tend to find them early. So the nice thing is we tend to be early investors in companies that end up really changing their industries in the world. We always step back and look at what's going on in the world in terms of the economy, what consumers are spending, where the money's being spent, and then look at how, what are the challenges and what management teams are really able to be nimble, be light on their feet and adjust. And then, especially coming out of recessions or coming into more effervescent times, emerge and actually take over and change their respective industries. And that's really, one of the things that we're really proud of over the years is we've had those companies that have kind of changed their respective industries.
Now, why might an investor want to consider LCLG?
Well, I think particularly in this time, there's a lot of talking about with passive investing, and there's some companies that really dominate this passive indices. Where we fit very well is our fund has a lot of the companies that we believe will be the next generation leaders. And so we're getting them a little early, and we're a very good complement to either just be growth allocation on your own or paired with passive indexing, because you're not getting the same stocks that you get, say, with a passive allocation.
So to quickly follow up on that, Stephen, how do you find those profitable companies?
Great question. And one of the things is we have a very disciplined process that we've been doing, again, since the mid-90s, where we step back and look at the economy, get the good economic trends, and then really spend a lot of time on quantitatively looking for earnings leadership, so those companies that are doing better. And then we also look at valuation. So we look at the PEG ratio. And we won't buy a PEG ratio a company new to the fund with a PEG ratio over 2. And what that we've found keeps us out of those companies that have just gotten so expensive. It's very hard for to make money in them going forward. And it also makes sure we're buying companies that are actually profitable. And as I said, have proven themselves to be able to take a great idea and turn it into a great business. And we found that discipline of focusing on growth, earnings leadership relative to peers, and actually ability to make money to be a really great combination for long-term growth investment.
Well, Stephen, great to have you with us. Thank you.
Thank you.